Well, good morning. Good morning. Good morning. Good morning, everybody. Give me 1 second. Get my. There we go. There we go. We are live. We are alive and live, ladies and gents. Happy Tuesday, February 10th, 6:30 a.m. Central Standard Time. It's funny. I just realized we got like 4 days until Valentine's Day, ladies and gents. How about that? So kudos to those that make relationships work. I'm kind of in between. Definitely been a challenge putting everything together. But hey, that's why I focus on my trading, right? Partly why. Good morning, Zambezi. Good morning, Algo Prime Plus. I am in the building. I is here. Well, ladies and gents, I got a few trades going on, just taking a stab at a few small positions. Nothing too crazy because they are, for the most part, on some smaller time frames. So I don't like putting on full positions in a smaller time frame, typically because there's a lot more noise. Okay. You guys have probably heard me say ad nauseum, my favorite trade is a daily 4-hour demand or supply zone confluence. So I did take a couple on a 1 hour, I believe. Let me double check over here and see what I got. Yeah, CAD yen is an hourly demand zone buy. The NASDAQ is a 4-hour short, but I didn't have. Yeah, see, that was a 4-hour on its own. I didn't have a daily confluence around it. So 4-hour short without the daily confluence. 1 hour long on the CAD yen. And then I got also, I got into that Visa trade I might have mentioned yesterday morning on stream. So we'll see how that goes after the market opens. And then also I have, let me go look over here, Swiss yen long, which I think that one's probably looking the best at the moment. But yeah, we'll go take a look at all these and top setups and see what we got going. So let me get my charts rolling and get the caffeine flowing. And then, as always, guys, let me know if you have anything you'd like me to push to the top of the list. Any trades you're in or trades you're looking to possibly get into. Long or short, obviously, I specialize in currencies as always. But if you have a stock you'd like to look at or a chart of oil or anything of that nature, just let me know. Because supply and demand works well in any asset, specifically as long as they have decent volume. Okay, as long as they have decent trading activity. In other words, it's not a very light liquidity item like a lot of penny stocks, which I have actually, went back when I was a penny stock trader for a short period of time in the past life. I still did use supply and demand, but I focused a lot more on retail specific trading styles because you don't typically have the big banks and the hedge funds on Wall Street trade penny stocks. They just can't. It's too thin a liquidity, right? They got to have stuff that's got a lot of trading activity, not just some dinky, crappy penny stock, right? But despite that, I still actually used it as just more or less one of my odds enhancers, talking about supply and demand zones, specifically on the 5-minute chart. Okay, I was playing in the noise. But there's quite a difference in trading penny stocks versus trading currencies or Bitcoin or anything else. And that is, you just have to figure out how to outfox the regular Joe and Jill traders at home on their computer. You can still find liquidity pockets, even though they're not the biggest. They're still present. They're still visible. And it's a little bit more on the breakout trading side as far as what I was doing on the penny stocks. But yeah, it was just too noisy and too much of a racket. I might get back into it one day because I still have an interest in it, but I didn't do the greatest. Let me just put it that way. I didn't trading penny stock attempt 1.0 did not go as planned. Okay. Again, I had to figure out pretty quickly that higher liquidity trading styles don't necessarily translate into thin liquidity. So yeah, lessons learned on that. That's the beautiful part about trading is there's always something to learn, win or lose, but especially in the losses. When you lose, that's going to teach you way more than anything I or any other person on YouTube can trade or can teach, right? Just like whenever we blow accounts. Okay. The good news for you guys watching is I have blown an account. Okay. Blown an account, blow a penny stock account, and then I blew a small $2,000 Forex account. Well, why is that a good thing? You don't know what you're talking about. Well, I learned what not to do. And that's half the battle in trading is learning what not to do. Okay. And a lot of that involves risk management, which is rules I didn't necessarily follow, especially in the penny stocks. Okay. I was just trading like the wild, wild west, not controlling my risk per trade. So I was taught risk management, proper risk management when I went to Online Trading Academy. But then you get into the actual accounts on something you don't really know a whole lot about what you're doing, and then you blow accounts, and then you realize, oh, this is why I was taught that, right? So thankfully, I take those losses and those lessons and factor it into the teaching today. Okay, the risk management, capital conservation is the number one job we have in trading. Yeah, we want to make lots of money, but you can't make lots of money if you don't have an account. So you have to learn how to lose properly when you do lose, small amounts, small percentage of the account, and then just have a higher reward to risk when you do win to make up for the losses and put a few bucks extra in your pocket, in your account. So, but anyway, I wanted to lead off the show, guys, to let you guys know, okay? Trader Nick over at A1 Trading has a free week of the Edge Finder. And the Edge Finder obviously is what I use every day for my top setups and all my macros and fundamental and sentiment analysis. But if you guys go to a1trading.com, you should get this pop up right away. You can unlock free access for the week through the 13th. Okay. So through Friday, 10, 11, 12, 13. Yeah, through Friday. So just click on that and it's going to just ask you for your name. What do you trade? And how do you think Edge Finder could help you best in your trading? I'll even give you a cheat sheet and give you the correct answer to that. Okay. It's to help you find high quality setups, buy and sell setups. I say it all the time, but the best part about getting set up with an Edge Finder is you can earn while you learn. Okay. You don't have to be an economist. You don't have to know the ins and the outs of the COT report. You don't have to know the ins and the outs of the retail sales report, like what we're getting here in an hour, okay, for the US dollar, by the way. We'll take a look at the economic calendar in a minute. But the inflation gauges, the jobs market info, okay, the employment numbers. You don't have to know all the ins and the outs of all this to start making money with this thing right away, okay, to start getting your lumps, taking your lumps, getting bruised up. Okay, have a few losses early on. This will help you to filter out a lot of it. It really does. Okay, if you find a really good setup on New Zealand yen as an example, which is our most bullish asset. Okay, let's say that you find a really good short opportunity. Okay, before you pull the trigger on shorting this currency pair, this will save you from that by saying, "Hey, wait a minute." Okay, New Zealand's looking way better than the yen as far as the currency strength, meaning the fundamental, are we meeting expectations? Are we missing expectations? This very simply tells you New Zealand dollar is way stronger than the Japanese yen right now. Right? Obviously, Japan's got its own set of things going on with the intervention whispers, like I mentioned on my shorts video yesterday. By the way, if you guys don't know, I do put up a shorts video every day, and I put up a funny news video yesterday as well. So like if you guys go to my site, which you're on now after the stream, just make sure and go over here and check out the fact that I'm going to probably start playing around and adding some more of these just quick little 4-minute, 5-minute news videos. And we all know how boring trading can get at times, right? Doesn't matter if you've been in it for 5 minutes, 5 months, 5 years, whatever. This stuff could get quite boring at times and monotonous. So my whole goal with writing up these news articles is just to take a page out of what I was doing when I was with Ola Prime. Because early on, I was, I was writing up a news piece and then saying it on air before the actual live stream started. To throw some puns and humor in there, okay? Get the blood flowing a little bit, get the excitement up. Okay, this isn't a football game that we're at or a basketball game, so we're not having a lot of rah-rah or cheerleading or anything crazy like that. But rather than just watching a video of some humdrum person, spitting out numbers and figures, especially for newer traders, it's just not going to land. They don't know what the hell, the levels of a chart are necessarily. So I just break it down as a third grader. It would say it, hey, we're going up, we're going down, or we're staying the same. Okay. And then I like to talk about the topics du jour in the geopolitical space, meaning what prime ministers, what premiers, what presidents are going to potentially move markets with their lip flapping or their tweets or any kind of, stuff like that. And then obviously the high impact events. I just do a quick hitter on it. Like I said, 4 minutes, 5 minutes, something like that. I just want to keep it short and simple and sweet and give you guys the important info with a touch of a pun and some humor. Okay. So that's the purpose of these. You can find those in my videos section. And then again, my Sunday video. Okay. I try to get this created now on Saturday evenings. That way I can release it, have it just auto or schedule release at 6 a.m. my time on Sundays. So that's just kind of a preview of the previous and current or upcoming week. And then, as far as my shorts, same thing. Just a quick 15, 30-second video on the topic du jour. What happened today? Okay. Obviously, yesterday was about Sanae Takaichi, okay, winning her landslide victory in Japan. And then talking about going back to the free hedge finder for the week. So definitely highly encourage you guys. I absolutely highly encourage you guys. And I don't get paid for pushing this out, but these are my buddies. I do some streams for them now, which I'll be on stream at 8 a.m. Central today, 8 a.m. Central Standard Time. But yeah, you guys have got it. You can't beat this. Okay. I'm telling you, this will filter out the bad choices. In other words, the example I go back to, if you find a really good short opportunity on the Kiwi yen, do you really want to do it if the New Zealand dollar is showing strength against the yen and sentiment? Okay. And all the economic growth data. It's not really getting so much help on the job side of things, but when it comes to economic growth, the consumer strength, a little bit of sentiment, guys. And not to mention the trend being up. Okay, this right here is all you need to know. So you really need to look at this as giving you permission only to go one way in a market. Okay. And that's where it comes back to when in doubt, zoom out. If you're looking at a smaller time frame, I'll get my stream back up. If you're looking at things on a smaller time frame and you see a signal like this going against your narrative, well, that's just where you zoom out. Zoom out to where the banks are trading, the hedge funds. Okay. And then you'll see, I don't know why I was looking at this thing short when trend is clearly going up on the higher time frame, on the time frames that matter, right? So yeah, definitely go check that out. Once again, a1trading.com. This will pop up. Go fill out the questionnaire. You'll get a reply back very quickly. They're all really cool people over there, and you'll be set up to test it out for free for the week. So, and then obviously, if you like it, great. Buy you a copy. It'll be the best investment you ever had. When I bought it myself, I had $0. I had negative $0 in the account. I stepped out on faith because I knew that I needed that piece, guys. It's been the best investment. So it was worth it for me. And I very quickly pulled my account from 9,000 in the hole on my challenge account with my 250K account to break even. So anyway, that's my spiel on that. As far as trades go, let me get my goodies over here rolling. Looks like TradingView has an 80% off deal on Valentine's Day. We got all kinds of stuff coming up. All right. Get this out of my way. And then yeah, as far as my trades go, I need to go over here to my Visa, put that on my chart. Let's take a look. Why not start with Visa? So Visa was giving me a very nice score of a 9. Okay. I mentioned this yesterday, but the momentum is really the only indicator going against the bullish narrative. Everything else is for the positive side. You've got a couple neutral items on the overextension, the debt to equity. Again, guys, I'm still learning what all this stuff means. But why not utilize it for telling me a bullish or bearish score and use my trading strategy, my supply and demand strategy, and just go ahead and start go placing trades on it. Okay. Yeah, I'm not going to lie to you guys. With the Edge Finder, I've got all this down. Okay. This is stuff I've been looking at for years. But when it comes to the stock side of things, yeah, still fairly new. Yeah. Watch out for this free week of Edge Finder. It will show you exactly why you need it. Yeah. That's right. That's right. Yep. Warning. It will help you. Yeah, it's the best thing ever, guys. I promise you. I'm curious. We might as well, let's just lead off with the Visa. We'll just take a quick look at a stock here. Okay. Going over to Visa, because again, supply and demand, the way I trade, it works just as well. Works perfect in stocks. Okay. So when it came to this opportunity over here, I kind of drew this trend line up showing that we were starting to, have higher highs. We had a kind of a double bottom down here, kind of the higher highs kind of forming. Okay. And then we had left this 4-hour demand zone right here with a big expanded range candle coming out with a close above the recent swing high. So that's a break of structure, right? Excuse me. So I just waited for a simple return to demand. Okay. And in the process of that, again, we just kept making higher highs. So we came back, go down to a 1 hour. Now, the 4-hour, excuse me, guys, there was a 1 hour demand zone. Kind of, it was mostly inside of the 4-hour zone. But as you can see, excuse me, clear my throat, guys. All right, there we go. So we had a 1 hour candle. And again, most of it was inside of the 4, but it did kind of peak out with the wick. Okay, that was my confirmation. They're my confluence. So 4-hour, 1 hour confluence. Okay. And then we just got a simple return to that. Had a nice super bearish or super bullish close up. A pretty strong volume as well. So it's kind of been going sideways throughout the rest of the intraday session yesterday. We did open up this morning on the downside, it looks like. So yeah, not really a whole lot to say on this. Just got to give it time and let it do its thing. If it takes a few days, so be it. Okay? I'll give it the few days it needs, but just looking for a return to the supply zone. Okay. You guys see I drew up a 4-hour supply zone right here that could potentially give it problems. So as far as my take profit, I've got 3 different accounts, guys. So it's on my 100K account that I have with Ola Prime. Having some of the top stocks, highly encourage going to Ola Prime and checking out their currency accounts. Because it was a little bit of a surprise. I didn't know that they came with, let me get my chart back up. I didn't know that it came with stocks. So as soon as I saw that, I'm like, oh crap, I'm gonna come over here and hit up the stock box now. Okay, which is the other product with Edge Finder or with the A1 Trading. Why does my damn screen stop sharing? You son of a bitch. Get this back up. There we go. So yeah, good stuff. But yeah, Visa, not really a whole lot. Just gonna let it do its thing. See if we can at least get a pullback to here to there. Okay. Just like my arrow points out. I got to take profit waiting on it. With the understanding that, hey, we could continue up and make some higher highs, just like the white line is showing here. So we'll see. We'll see how that goes. What else do I have? I have a position in the CAD yen, which has given us a bullish 6 right now. And then on a different account, I've got a Swiss yen. Okay. So I've got those two. And then again, I got, oh, okay. So it popped back on. So I got short on the NASDAQ. And then because it was giving me a -5, it popped up to -4. So it actually popped into neutral territory for a short while. And then this morning, it looks like it's back on the bearish list. So that's nice. And it's pretty well just chewing through the supply zone. Let's go look at that NASDAQ real quick, guys. Nazzy, 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 Nazzy. Okay. So daily chart, we've got the lower low going down to 4-hour chart. We've got lower lows and lower highs. Okay. So that's basically what I was looking at first. In up here, we had this 4-hour supply zone. Very strong VSA candle on the leg out candle. Left behind a really nice fair value gap from here to here, showing strength, showing that supply heavily exceeded demand. And that's why we closed down here. And then the candle right after only retraced half of that. So we left in its wake that fair value gap. Okay. So I love seeing these fair value gaps as always, guys. Can I have a look at coffee and let me know your thoughts? Yeah. Okay. Yeah. Zambezi, give me 1 second. We'll take a look at coffee. Let me know the ticker because I've never actually looked at coffee, but I could definitely look at it from a supply and demand perspective. But just to finish up on NASDAQ, yeah, supply heavily exceeds demand. The retracement after the leg out candle doesn't even come up but halfway. So it leaves all that open space right there. Now, price came up, okay, closed the gap yesterday, right, like that. And then we touched into the supply zone, catching unfilled orders. And we also hit a 50-period EMA on the 4-hour chart. Okay, so just as always, trading is all about stacking as many odds enhancers in your favor as possible. Oh, the ticker is just coffee. Okay, simple enough. But yeah, we got that that push into supply. We had a 4-hour candle that closed really strongly bearish. Okay, it's a green candle, but we closed under the 50% range of the candle, right? So don't always be fooled by the color of a candle. Just because it closes green does not necessarily mean it's a bullish candle. Same thing in reverse. Okay? Just because it closes red does not always mean it's a bearish candle. So this was a bearish candle because we closed under the midpoint. That's the easiest way to think about, hey, is this candle bullish or bearish, right? Ignore the color. Just ignore the color. We only care about what side of the 50 baseline did it close on, right? So bearish candle started going down. Obviously, we did get that push back up during the intraday morning session yesterday. And then once we got a little deeper into the supply zone, it's just kind of, it's holding it. Okay. I mean, think about it. From this recent move up, it's just stopped in its tracks right at that supply zone. So it's a fight. It's a fight right now. You still got buyers interested in this up move. So they're buying. Meanwhile, you got sellers and unfilled orders over here fighting the other side. So who's going to win this race? Who's going to win this fight? Well, we'll see. I mean, I put money on shorting it, and I put money on shorting it back to the origin of the strong move up. So that's my bet. I'm sticking with it. Just going to let it do its thing. There's nothing I can do. Okay. Nothing I can do, but I got a stop loss up here if it obviously goes against me for a small loss. And then I've got a take profit down here for a decent win. Okay. So there is that trade right there. Again, I wished I had the ability to show all of my actual trading accounts, but I don't because it only allows you to, for some reason, it only allows you to log into one account at a time because I got two with TradeLocker. and I have them all on different browsers. So I've got Google Chrome, which is what I primarily use, but then I also have Microsoft Edge for one account, and then Firefox for my other account. But then I can't share the screen, so I just talk about everything over here like this, guys. So that's NASI. I'm glad to see that it is back on the short list, back on the bus. Coffee. Let's go hop in some coffee. All right. Got all kinds of choices. All kinds of choices. Coffee futures. Coffee. We'll just go with this. See what we got here. All right. And you said, I'll use, okay, CFD. Oh. So like Forex.com. Yeah, let's check that out. Okay. It'll be similar. I mean, they'll all be similar. So you had said price is currently in a demand zone. Oh, okay. Yeah. All right. What time frame is your demand zone? Talking about like a weekly? Let's see here. Because that's clearly a monthly demand zone. I like it from a monthly. Well, I like the I should specify. I like the gap away. From a monthly chart, yeah, I guess you could say we did break. Okay, so let's do this. Let's go to weekly. Okay. Let's go to a daily, actually. As far as daily, we got demand here. I think that's probably the one you're looking at. Oh, no, we're below that one. I mean, we're kind of this swing low, swing high. If we expanded that to incorporate that, then yeah, we'd be in a demand. Yeah, it's hard for me to make a judgment without knowing the fundamentals behind it. But yeah, I mean, clearly you're in a demand zone. This strong move out broke this swing high here. Okay, or I should say this structure point. Because if you think about it, let me just get this drawn up real quick. We had a drop, we had a kind of a reverse up, we had a base, and then we had a drop. So after price left this zone, I mean, that's a nice strong move up, and we closed above this structure point. And then after some more time, we closed. Well, we didn't close, but we did puncture that structure. Okay, a little higher up, and now we are returning. So what I like is we had a strong move up, price based for several weeks. Price dropped down. It started coming down slower than it went up. So the momentum was less than the leg out. So I like that because it means it's not coming in too hot and heavy. But then all of a sudden, this month, its momentum has picked up. Okay. So that's just one thing to be careful about. It's catching, do we want to look at it like we're trying to catch a falling knife, right? Because the momentum is coming in pretty hot and heavy. Whenever I have prices return to a zone, I like it to kind of slow down a little bit, right? Something like that. Kind of like you're skipping a rock across a pond, right? You can't do it if you just throw it straight down, right? Because oftentimes momentum like this can just overpower the zone. So that's just something to be aware of. Monthly, weekly, daily. No, I like it though. I mean, yeah, that's a clear monthly demand. That's about as good as it looks. You've got a monthly confluence you've got a you've got a weekly confluence. Okay, red candle there. You could either use the red candle or the top of this green candle. They're pretty much pretty similar. So you're either way though. You're right there at the bottom of the weekly. If you use the red candle, you're right at the bottom. So then you go obviously to a daily. And yeah, you got now here's something to keep in mind. Efficiency in markets. So, and this doesn't matter what time frame you look at this on, it works the same. When you're looking for when you're looking to verify the strength of your zones, just always make sure you have a gap. So obviously right here we do have a gap. Okay, there's your fair value gap, your acceleration gap, whatever you want to call it. So that's showing that this demand heavily exceeded supply to the point to where it left the gap, left the inefficiency. This is what banks attack. This is what the smart money attacks because they know there's typically unfilled orders on the other side of that, whether it's supply or demand zone. But down here, you don't see any gaps. So that's an efficient price structure. So yeah, I mean, as long as you don't pierce the bottom, you should be good. I mean, like I said, I don't know the fundamentals or sentiment behind it. But from a pure technical standpoint, it's kind of hard to ignore that. Monthly is up when you're talking trend. Hey, weekly, yeah, as long as we stay above as long as we don't break this low. I mean, if we break that white line to the downside, then you could possibly look at the fact that now we have lower high and then obviously a lower low. So would that be a potential reversal? But then you've got this other zone, this other zone structure right down here. So even perhaps you could get if price were to blow through this zone that you're currently in, well, there you go. You got another set of zones here. Now there's a lot of candles to the left of it. So I wouldn't, but you do have some former resistance points. So this is where I like to draw my, my former resistance and support lines, blue and dash like that. Okay. Because that's obviously on a weekly chart, a strong resistance because then the bottom fell out of it. Okay. And it'll look a lot better on a smaller time frame too. And that's, so that's over here. I mean, you could even look at maybe even this swing high here or this resistance point here. And you actually have one right now. Let's see here at the bottom. So look at that. You got a former resistance point, which preceded a strong drop. Okay, it doesn't look as strong on a weekly chart, but when we start dropping down to smaller time frames, it's going to look nicer. Okay. Swing high, going right at the distal line, meaning the farthest line of your monthly demand zone. So if you're looking to buy this, I would just recommend you put your stop loss underneath that blue dash line. Give it some breathing room. I mean, if this is a position trade or long-term swing trade, that would be my recommendation. Obviously, do what you want, but that way you can at least incorporate that odds enhancer of this former resistance point, and then just put your stop underneath. So, not bad from a technical aspect. 4-hour free entry, yeah, good stuff. Hopefully that helps. You're definitely low on the curve. Okay. Super low on the curve. I like it. I don't really see on a 4-hour chart, though. The only thing is I don't really see there is an inefficiency. Okay. So you'd look at your 4-hour. This right here is how I personally would draw up the 4-hour demand. Let me zoom in. Now we've all obviously blown through this 4-hour, right? Because price is currently right here. But that right there is the only 4-hour demand I see because you can't use this red candle because it overlaps this candle here, right? So that's a closed market. That's an efficient market. But right here, you've got your fair value gap from here to here. Right? Below that, you've got efficient price. There's no gaps. That's the only gap, and it's right in the center, which is basically, yeah, let's pull the 4-hour forward here. Okay. Pulling the 4-hour forward. We've went through it. Okay. So, hopefully that'll kind of slow it down for you and give you a little bit of a lift. Let me turn off my ribbon. Yeah, and I don't have the volume on here either, I guess, but yeah, it's blown through it. But hey, the point is it's still within the daily. And then this is how I would do it anyway. I mean, when I do a daily 4-hour confluence, I usually I don't put my stop loss below the 4-hour. Okay? I usually always put it underneath the daily down here. Now, in this case, because we have the monthly, that's just an added confluence. So, what's the difference from there to there where I put it earlier? I mean, this is really up to you. This is up to everybody individually. Everybody's going to have a different risk tolerance. Obviously, the aggressive approach, if you're a 4-hour trader, is to put it underneath the 4-hour, but then it will have closed you out, depending on how wide your stop loss is. Or you can go below the daily, which I think is safer. And so far, you're still in that trade. Okay. And if you're not yet in the trade, well, maybe you could look for a break structure to the upside. So, I think the safest thing to do, actually, here's the thing. So you gotta swing high, you gotta swing low, you got a new set of swing highs going on right now. If you wanted to count that as your swing high, then perhaps you get something like this. In other words, if we're looking at a second chance entry, let's say you're not in the trade. Well, let's do this actually. Okay, now that we know that we've hit the 4-hour, I'm just going to move it out of my way for a second. To really be safe on this, I think that would be a 1-hour demand right there. Let me see what that looks like on a 4-hour. Yeah, I mean, you could even just move it to this. Look at that. So that's a beautiful 4-hour indecision candle. Kind of like a doji. So if you really wanted to be safe on this and trade from this, then you could obviously look for a break of structure right here. I wouldn't use this one down here. I think it'd be a little aggressive. But longer term, this is where I always draw up the confirmation entry. So break structure, break this swing high, and preferably get a close. But then you wait, because now what happens when you close above this swing high? Then this price action turns into an impulse leg from this, this swing low to the current swing high, assuming we close up here. It's because we've broken the structure. So this is a new impulse leg. So that tells me that there's strength somewhere in that move. And where is the highest probability spot to get a bounce? As close to the origin of the strong move as possible. In this case, we have a 4-hour indecision candle. It's a daily demand zone. We've got a fair value gap above it. So you just get a simple retracement back as your kind of your second chance, or really first chance. I wouldn't even call it second chance because we haven't even broken structure yet. But then down here, when you fall into this newly created demand zone, that happened just under a 4-hour, but happened inside of a daily, happened inside of a weekly, happened inside of a monthly. That's a pretty good confluence for a possible push up. So again, you got your gap showing strength, origin of the strong move up. But again, I personally would wait for this. I would wait for a break of structure because at this point, it's nothing but lower lows and lower highs on the smaller time frames, right? So I need to see a chink in the armor, if you will. I need to at least see it trying to change direction. And if you break a structure, that's that's half of the guesswork right there. Then you get a return to this newly created demand zone. And there's your entry. Oh, gosh, I do that every time. I hate this circle thing. It never works the way I want it to. But yeah, right there's your entry. That's what I was trying to do. Does that make sense, guys? When I talk about this impulse leg, a simple way to think about supply and demand is always look for an impulse leg, meaning did that price action, and doesn't matter how many candles it is, but did a collection of up move, because this would be a new up move, right? This would be a new up move. It would be on this smaller time frame a break of structure, because there you have to have lower lows and lower highs if this is a downtrend, a smaller time frame downtrend. Obviously, we're looking at it in the context of a monthly, daily, weekly. So you have to find a chink in the armor showing that, hey, the buyers are saying, to hell with this shit. I'm done with price going down. We're going to break some structure and take out these stop losses up here. Okay, that'll tell the shorts, oh, hell, maybe we've made all the money we can have. Okay. Break that structure, and then it's just a simple discount back to a newly created demand zone, ladies and gents. That is your confirmation entry. I love this entry. Why do I love this entry? I love it because it keeps me out of a lot of losses. Because here's the things that can happen. Let's just say you buy and you don't wait for a break of structure and a retracement. Obviously, you'll get, one of two things is going to happen. You're obviously going to profit on your trade like this, but it also opens you up to a lot of false moves to where you make a new lower low and then you get stopped out for a small loss. Okay. So that's obviously that's the only two things that can happen. Or it goes sideways, you get bored, you just close it early, right? But, so yeah, I'll lose trades like this a lot. Not lose trades. I won't get into trades that are winners, but I'll also what could happen is it just keeps going down. Then you've taken a small loss. So it's just, again, it's not anything I can tell you or any trading coach out there. You have your own risk tolerance. I just know that for me, okay, this limits a lot of needless losses just by looking for that simple break of structure. So anyway, hope that helps you out. And by the way, guys and gals, I did forget to mention at the outset, I am actually going to be appearing on Trader Nick's stream, A1 Trading, in 45 minutes. So I'm actually going to cut this short here in about 15 minutes. Totally forgot to tell you guys that. But yeah, just yeah. Now this is 9 a.m. Eastern, which is 8 a.m. my time, Central Time. But yeah, I'll be on the show here. So if you guys want to come over there, I'll go through some of these trades probably a little more in depth, look at some more top setups. But yeah, that's what I'll be up to. So I'll be cutting this short, half hour short. And I still haven't quite worked out all my schedule over here yet. I actually, on that note, as far as the rest of this week for me, I've got a 4-day class I'm taking, and it's just insane hours. It's going to be 3 a.m. my time, 3 a.m. my time until 10 a.m. Starting tomorrow. So it's Wednesday, Thursday, Friday, Saturday. Okay. So I'm going to try to do my personal streams after that. So probably around 11 a.m. Central Standard Time. We'll just go through the lunchtime doldrums, if you will. That way I can keep you guys up to date on some trades and top setups and things of that nature. But then next week, everything will be back to normal. So yeah, this right now is the last early show for the week. Yeah. Yeah, I basically took a spot where I was given a 100K account. It's funded already. I had to interview for it twice, and they liked me. They liked what they saw, so I appreciated it. But yeah, I've got a 4-day class with them, so got to go do that. Learn some more of their strategies and styles. Let's go take a look at these. So this is let's see here. So this is the Swiss yen trade that I got in. Now I got into this on this 4-hour demand bounce right here. Okay, we kind of wicked in there. Let me go down to a smaller time frame. Yeah, kind of the same thing with the other trade. I got this really nice 1 hour bullish candle. I mean, that's about as bullish as it gets. When you have a big wick and then the buyers just slam the door shut at the top, right? After price drops into the zone. Bought on the next candle when we busted out. And it's, kind of doing its thing, going against me. But CAD yen or Swiss yen giving that bullish 5 score. Okay. So it's not the strongest. Again, a lot of these currency pairs have kind of reverted closer to neutral. We had several double-digit scores, a week ago, but now we're down to just the one for Kiwi yen. So yeah, that's the Swiss yen trade I'm in at the moment. Obviously, this demand zone was, broke structure. We had gaps on 4 hour and 1 hour showing strength, confluence strength, and that's after bumping into this demand zone over here. So in the context, we wicked into this one-time 1 hour demand zone, which broke a structure. Okay. And then we closed with a big wick. So that's showing more bullish strength. And then in the wake is where we created that 4 hour. So that was kind of my thinking on that. But we'll see how that turns out. It's just dancing around. Actually, most of these trades are kind of just dancing around sideways, not really getting any strong pushes. So if they're like this tomorrow, I very well could close 1 or 2 of these out early. Again, if I get into a trade off a supplier demand zone, I want it to work right away. If it works right away, then it's obviously a strong zone. Oftentimes, if it just dilly-dallies and goes sideways, then that's really telling me, well, maybe it's not as strong as I thought it was, right? And then obviously, if we get to the end of the week and they're still around this same general area, I'm just going to cut them, whether it's a small loss or, break even or a small win. So I don't want to leave them open over the weekend. And especially if you guys are in any prop firms that, that don't allow weekend trading. So it's just kind of a good habit to be in, not just from a challenge account perspective, but your sanity. Okay. We've all seen how geopolitics affects things on the weekends. And then you come in and you get ugly Sunday gaps. They go against you like crazy. Right. So, but yeah, again, same thing. Everybody has their own risk tolerance. Yeah, that Swiss yen. I was watching this one last night, the pound New Zealand. We were getting a bearish score on this, and almost thought about getting into this short setup here because on and this is a smaller time frame, by the way, guys. So 15-minute, we had a supply zone here. The anticipation would have been to put a stop loss above this recent swing high as well. Obviously, we have a 15-minute demand down here, which is a potential barrier if price were to drop. So to me, that just wasn't really that great of a profit target. It wasn't as good of a reward to risk ratio. Okay, because with the 15-minute there, that's just a very prominent swing high, is it not? So the smart thing to do, or I should say the conservative or easy thing to do would have been to put a stop loss above the whole thing. But I can't ignore that 15-minute supply. It just looked too good. But if we measure from the proximal line of the supply zone, okay, the beginning of it to the short or to the stop loss, just call it 50 pips, right? 49.8. And if I go down to the proximal line of the demand zone, that's 73 pips. So that's about a 1.5 to 1 reward risk ratio. I don't like doing anything under 3 to 1 personally. 2 to 1 at the absolute minimum if I feel really strongly about a zone. But I try to find 3 to 1s. And for me personally, that just didn't fit my personal criteria. Okay. So I avoided it. We ended up chewing through the zone itself and then got a little bit of a push down. But now we started bouncing into the 7 o'clock hour. 6 o'clock and 7 o'clock hour here in the States, or here in my time zone, and which also coincided, if you look, with a bottom here, a bottom here, a bottom here, bottom here. So in other words, quite a strong looking support. Okay. That right there pretty much covers this swing low, this one, these wicks in here, these wicks hiding in here. Okay. And then these wicks. So it looks like we're getting a little bit of a rejection or continued rejection, right? And yeah, at this point, that's not anything I'd be interested in getting into. So I'm glad I stayed out of it. But again, the reason I stayed out of it was because going back to the 15, it just was not good enough of a reward risk ratio for me. What's going on, L House? Take me a drink of water. Again, guys, I'm going to be out of here in about 9 minutes so I can prep for my next stream. But I still got 9 minutes. So if you guys got any other assets you'd like me to look at, holla at your boy. And once again, everybody, and I'll mention it on the next stream as well. But do keep in mind, if you go to a1trading.com, up here, you can click free week. Okay, up here, or this will pop up, one or the other, to unlock your free access to the Edge Finder. Guys, if you were not on at the outset of the show, I mentioned this, but just briefly, definitely go click on this link or click up here at the top where it says free week, and you can actually get a free copy of the Edge Finder, which is my favorite tool in the history of tools. This will help you nerd out on fundamental data and sentiment data. People that pay for Bloomberg Terminal typically pay like $25,000 a year, something like $2,000 a month. Okay. But this is, to me, just as good. Okay. And it's simple. And it's a fraction of that, a complete fraction of that. You're going to pay less than Bloomberg Terminal users pay in a whole month. Okay. Much less. So definitely go and check that out. Get you a free copy, play around with it. You'll get access to the top setups, all the macro scanners, the sentiment data as far as the smart money and dumb money numbers, put to call ratios, AAII investor surveys, okay, contrarian signals, 4 signals, okay, all kinds of signals, auditings, and you get a car, and you get a car, and you get a car. But you got to check it out, guys. I'm telling you. I want to look at, let's see, did we look at CAD yen? CAD yen. CAD yen. Yeah, this is one I was looking at as well, CAD yen. But we had a demand here. Okay, now a little higher, we had a kind of a double bottom. So I drew up a demand zone hiding in here, which I think was a 5-minute. Yeah. So this was a pretty nice little demand zone. I didn't get into this because I didn't quite like the fact that we didn't break a structure right here. Okay, but we had what happened. I mean, yesterday we had 8:30 a.m. my time. We had price drop in beautifully. And this is what I was pointing out. So for this little section of price action here that pushed price up, okay, I was looking at the fact that, hey, we had some stop loss orders down here, did we not? All these buyers in this area that pushed price up, hey, they got to put their stop somewhere. So I was looking at the fact that they put their liquidity right here in these unfilled orders of this demand zone. Then what happened? Price dropped in, pushed out. Now, I was interested in kind of a retracement to this demand here. I put a stop, pretty deep because that's kind of a narrow range. Yeah, we'll look at gold here in a second, L House, for sure. Narrow range. So I decided to give it some more breathing room. Okay, and as you can see, it's not looking so pretty. So we'll see how that one shapes up. But just a simple retracement to the demand zone. And then on the 1-hour candle that we left, okay, going in, I wanted to see a 1-hour candle coming out with a close. Okay, we got the close, got the push up. I got in up here, but as you can see, it's kind of going against me. So We'll see if this eventually starts catching a bid or not. But that is the trade I got into. But again, I gave it a pretty good stop loss. So gold, you're wanting to look at gold. Let's go look at that. So gold on the top setups is still giving us a fairly neutral score. It's a tiny bit closer to the bullish side, though. We do have a +2, but it's really, guys, it's just because of the technicals. A +4 sentiment, meaning combination of the big banks and contrarian signals, is giving us a -2. And then we're getting nothing on the eco scoring, okay, the economic calendar, as far as it affects the dollar, and then we utilize as kind of the inverse for gold and silver. So, but technically, it's telling me it's pretty strong. So let's go take a look. Daily, yeah. So since we had that big ugly drop on gold, combination of profit taking, combination of Kevin Warsh getting nominated by President Trump, okay, to be the new Fed chair. That's why we had, that's a big reason. And obviously some Iran tension easing. Okay, all that kind of translated into closing of longs, okay, profit taking, maybe some shorts thrown in there. So that followed through till Monday of last week. We had a big drop, but then we had a nice bullish. Look at here. I mean, is this candle right here, is that a bullish or a bearish candle? What do you think? Bullish or bearish candle? This candle right here. What do you think? Let's see here. I'm actually kind of curious. Did we close above or below the 50% line of that candle? Looks to me like we closed on above 50, right? Right. There's our 50 line, that orange line. We closed above it. So even though that's a big, ugly red candle, that, my friends, is a bullish candle. Okay. So ever since we had that bullish candle, we've had just a little bit of a grind up on metals, or on gold specifically. So let's go down to a 4-hour. And as you can see, we have a new higher low, and we're currently at the swing high. Okay, we have not yet broken it. So we haven't broken that structure. So I don't feel confident in saying that we're in an uptrend until we break this structure right here. Till we break that line right there. If we break that white line and close, my friends, we might have a little bit of an uptrend on our hands, but we don't. So it's really just kind of sideways question marks at the moment. I mean, obviously, you open this thing up to a weekly, a monthly, daily. This is still higher highs and higher lows. It really is. I mean, even as bad as that, as ugly as that looked, okay, when we had that that trio of info I just mentioned, that swing low did not go below this swing low. In fact, bounced into a daily zone, a daily demand. And then what happened? And that's where it bounced. So this is a demand zone. Okay, it just showing you demand, the strength in supply and demand zones. Oh, by the way, just below it was a former strong reversal resistance line. Okay, didn't quite hit it, but it touched the daily demand. And then we got this push up. So, I mean, yeah, if you put a gun to my head and said buy or sell gold, I would definitely buy gold because of the structure from the technicals. Right? I mean, that's a pretty, even though we're not getting an overall bullish signal or bearish, that's a strong signal if you're just strictly a technical trader. +4, hell yeah. But just keep in mind that the sentiment's telling us otherwise. Let's go look at the COT report real quick. And I got to get out of here in about a minute, ladies and gents. So we'll take just a super quick look at this. No, I don't want to do that. Okay, gold. Remember, the banks, think about this. The big banks and institutions they got rid of, so listen to this. They got rid of 37,500 long contracts. That in itself is a bearish signal, right? and they also added 2,200 short contracts, though. So that's also a bearish. So you had a bearish, you had a bearish lean on both the long and the short side. When you get rid of that many long positions, that's a bearish move. You add up both those, minus 2.9% on the week. Okay. It's not like an overwhelmingly bearish signal. I mean, if it's like -2 to +2, I kind of look at it as just kind of like, okay, not really a big difference. When you start getting higher numbers, obviously 4 and 5% negative, or, up here, like we got silver. So silver, on the flip side, silver, the banks liked. Okay, the hedge funds liked, because they increased their long percentage by 6.2%. Now it's kind of interesting how they did it, though. They actually got rid of 4,500 long contracts. So remember, that's a bearish signal. But they got rid of over 2,000 more short contracts. Okay. They got rid of 6,700 short contracts. So that is a nice bullish signal. And when you do the math and you average everything out, it was a net change of 6.2% to the long side, giving it a bullish. So you basically have competing narratives from the banks and the hedge funds. They really liked silver, but they really disliked gold. So again, COT, when we're talking smart money, the relationship between smart money and dumb money, the sentiment analysis, it's just not giving us anything. But yeah, just to finish off, I mean, from a technical aspect, I would feel personally more comfortable about buying if we could break this swing high, 5,091. If we can get up to 5,100 and pierce through 5,100 with a decent close, that would make it even look better, because then you're breaking through a psychological level. But up here, I just feel like this is high on the curve, because if I'm looking at curve analysis, I'm looking at the most recent swing low to the most recent swing high. Okay. And you can look at either one. You can move it to here or here. Doesn't matter. Right. You're in the top third. So in general, the idea is you want to be selling in the top third of this curve analysis. You don't want to do anything in the middle. We don't want to diddle in the middle, because that chops us up. And then we obviously want to buy in the discount zone, which is the bottom third. So just keep in mind, if you do buy this up here, you're buying at expensive prices, right? If you wait and you buy down here, well, number one, you got a really strong looking 4-hour demand zone candle. That's as potent as it gets right there. Good gosh. Look at that. Got a big wick on the bottom of it. That's pretty strong. There's your 4-hour demand. And then furthermore, you can drop it to a 1-hour. See if you have any gap here. Yeah, we got a little bit of a gap. Not like the strongest gap, but it is a gap nevertheless. Talking about top of that wick to the bottom of this wick. Okay, it's not the strongest, I got to admit. So maybe we'll go down to a 30-minute. See if the picture looks any better on a 30-minute. Okay, there's efficient price action. Yeah, and see, even all this is efficient, because that body, that red candle, overlaps the bottom of this wick over here. Right? So that's an efficient price action. The only wick I see is the same one that we just looked at for the 1 hour, except this one is the 30 minutes. So it would just look a little bit better, actually. So yeah, I would just say the top of that, if I were putting money on gold, that's basically what I'd be looking at. Because I don't want to buy crab legs at full price. Crab legs are expensive enough at full price. Right? I want crab legs half off. I want a discount on that expensive ass set of crab legs. So give me a discount down here. Then I can take it back to the top of the curve and sell it. Okay? Buy, sell, buy, sell, buy, sell. Just a ping pong game, ladies and gents. But I do have to get up out of here. I'll be on Trader Nick's show here in just a short little bit of time. Again, a1trading.com. Get you a free week of Hedge Finder. And I'll be posting on my YouTube posts. Okay. I'll post on here later when I figure out my schedule for the rest of the week. I do know that I do, like I said, my classes, I finish at 10 a.m. my time. 10 a.m. my time. Yeah, 10 a.m. Central Standard Time. So assuming I'm not dead to the world from lack of sleep, then I'm just going to try to do a stream right after. So just tentatively plan on 11 a.m. Central Standard Time for the rest of this week for my live stream. And then next week, everything will be back to normal. Fair enough? All right, ladies and gents, I'll talk to you guys later. Have a wonderful day.